Good afternoon, everybody, and welcome with the frog in the throat. Welcome to Monday afternoon's weekly analysis session for the US of A. It's Monday, the 11th of April. Our disclaimer that we always have to go through: the content of today's presentation or any other Elite Traders Club material does not constitute a recommendation, nor does it take into account your investment objectives, financial situation, nor particular needs. So, as always, before making an investing decision based on the general advice presented in any of our presentations, please consider whether the advice is appropriate in light of your financial circumstances or seek further advice on its appropriateness. Okie dokie. Again, we'll go through and have a look at what's happened on the markets this last week. We did run a recorded session, a macro session on Friday, and Jeff went into a fair bit of detail actually about the impact of earnings season in the US. So if you haven't had a chance to listen to that, it's certainly well worth a listen. From a statistical point of view, then it's important to understand, the impact of those earnings, what can actually happen to a stock price. Now, David, you've said there that you can't see the slides. Let's have a look. Screen sharing. Let's have a look, and that's in there. So I just want to check. Audience view. Oh, of course you can't see anything on the screen because I haven't shared the screen. So just hang on for a tick, and there we go. Fantastic. You should be able to see that now, David. And apologies to everybody for not showing my screen there. I had that little section of the GoToMeeting software obscured, and normally that's sitting right in front of me. So in that case, it was out of sight, out of mind. Apologies. So back on track. Just a quick reminder: the macroeconomics analysis session, as just mentioned, a really good session on the impact of earnings in the US, and what some of the things that can happen to stocks during those particular times. Statistically, how far can they move? The US market is obviously a very sizable market, but it also is a very sizable options market, and has it's an interesting place to trade options because of the volatility over there, and volatility is the main driver of options pricing. Anyway, that's a little bit off topic, and certainly we'll have some Q&A at the end if you've got any questions in relation to the strategy. The S&P 1500 is just ticked over into low risk. We'll go and have a look at the chart in a moment. So what does that mean from a capital management point of view? Well, basically what it's really telling us is that at this particular level of market risk, it's okay to have all your capital exposed to the market. Now, if you're dealing with shares, as we've mentioned before, it's very difficult to get that normal sort of 15% allowable maximum value at risk in the market when you're dealing with direct equities. It's almost impossible to get much more than about 10% value at risk, because you basically just run out of capital. So the easiest way to think about this is a little bit like a traffic light sort of system. Low meaning 100% of your capital exposed, moderate 80, 40, etc. So it's just giving you a bit of a feel for what the levels of market risk are. So we just need to be aware of that, obviously. A little bit like when you're driving your car, just driving according to the specific road conditions and keeping an eye out for any potential changes in those conditions as well. So what we might do is go over to the markets, have a bit of a look at what we're able to find this week. There was, from the scan, there was around just over 200 results that came up on the scans. I only managed to find one new setup. There's a couple of cancellations from last week, and there's just on 5 trail stops as well. So we might go through and have a look at the markets now. So there's our benchmark index there, the S&P 1500, and you'll see that our stochastic there has just got up into the low risk territory level. Really interesting to note that every time we've had these bounces and got up into low risk, that we've only been there for a very small amount of time before sort of moving back down, moving back up to low risk, moving back down, before sort of giving way to the downward side. So I think it's really important over the next several weeks that we can hold this level if the market's going to see any further upside movement as we go through the earnings season, or whether it's going to just pause, stagnate, and start to roll down again. So again, we can't forecast anything, and it's really just a matter of this stage, just observing what's been happening. But the last time, significantly a couple of years ago when we had this big V-shaped movement and we got up to 100%, we were at least able to sort of hold those particular levels in a sort of broad, slow, sort of directional move towards the upside. Recent times when we've had those big moves, the market hasn't really been able to hang on to them and we've capitulated. So I think if this market is going to stay at this particular level, it'll need to hold up during earnings seasons for it to do so. So that's where we are on the S&P 1500. We'll go through and have a look at the pendings for the time being. This was the only trade that I could find over the last week. AWK. We already have this in the watch list from several months ago. And you'll see that initial entry way back down here at around about $60 odd it was when we first got into it. And since then, it's actually performed really well since breaking out from the earlier level, retesting the breakout, and then extending, coming back, retesting, and looks like it's ready to move on again. And again, the relative strength aspect is really important with with your stock selection, that it's outperforming the broader market. So where are we in terms of history? We're at all-time high. So again, something obviously fundamentally very sound with this particular stock. All we have to do is wait for a break of the last candle high. That last candle high there is 70.62, which is a little bit higher than that last high of the medium-term peak. So the medium-term peak there is at 70.10. The high of the last candle there, which has just put us into the short-term uptrend, the high there is 70.62. So we just need to put an on-stop order 0.5% above that level. And other than that, we're meeting all the criteria. Good relative strength, really good price action, last trough way above second from last medium-term peak. So the structure for this trade is on stop at $70.97 with a stop loss at $66.21. So that's at least 2 ATRs below that entry level, and it's also at least 0.5% below that last medium-term trough. You'll see the way that's been behaving last week as well is that little green line, our trailing 3 ATR, has also been dragged up higher as well. So those of you who are in the existing or the pre-existing trade will need to trail your stops accordingly as well. So that was the only one that I could find this particular week in terms of new setups. If anyone managed to find any others, please shout out or type in on your keyboard there. What we will do is we'll go through some of the other trades that are still pending at this particular point in time. RE hasn't quite got to our on-stop order level there. The on-stop order there at $200.44. The high last week, 199.95. So not able to crack the $200 mark just yet, but it's still, in terms of price action, still ticking the boxes. PNRA, last week's candle, certainly not all that bullish. Certainly got sold off during the earlier part of the week. Recovered a little bit. Still a valid setup. It's still got a fair bit of work to do before it gets to our on-stop order level, though, at the moment. The other ones in the list are NDAQ. This stock is actually going to come out of the watch list, and you'll note here that we've now got lower peak being formed. So lower peaks there. No matter where this next trough forms, wherever it forms, the subsequent trough, is it going to be at or above the second from last peak? Well, this will be the last peak, and this will be the second from last peak. So wherever it falls, even at this level, wherever it forms rather, that's going to be well below that second from last peak level. So that just means that it invalidates the price action rules, and so therefore it's a avoid entry. INGR, getting close to triggering there. Not a bad candle last week. just needed to do a little bit more. Our on-stop order there at 110.55, and you'll see the high there last week at 110.29. So not quite there, but certainly not a bad candle compared to what the rest of the market did. And you can see that in that last period there, still outperforming in all three time frames. So I'll just have to wait and see what happens with that one. ELS, again, last week's candle, not all that flash. Would have been nice to see it do a little bit more, but nevertheless, we're still in short-term uptrend and it still meets all the price action criteria as well. So that one's just sitting there for the time being, just pending. CINF, a little bit like the previous one that we've cancelled. At this particular point, we're in short-term downtrend. So again, wherever that new trough forms, where is that going to be in relation to the second from last medium-term peak? It's going to be well below it. So again, the price action aspect of it is now become invalidated. So that will come out of the watch list. So that was just those two stocks there, CINF and NDAQ. A couple of trades that triggered last week. The first one, DPZ, Domino's Pizza. And again, this is a stock that's maintained its relative strength for a long period of time, and I think it's worthwhile just putting on a trailing stop, so to speak, just to see how it performs in relation to it. And if we go through there and just have a bit of a look, it's managed for most of the time to sort of respect its trailing stop. Obviously through here a little bit of weakness where if you had been in this earlier on, you would have been stopped out through that particular level there. But certainly in terms of recent setups, it's looking really good, really strong. This sideways pattern it's now broken out of. It's come back, it's retested the upper levels, if you like, of that particular supply zone, now acting as a demand zone. So that triggered in last week. DPZ, G, which is Genpact, also triggering in last week. Would have been nicer to see a bit more bullish candle than that one, but nevertheless triggered its entry, and that's also open in the watch list. Altria Group, another one that triggered last week, and at least a little bit more bullish candle there, a white candle there, taking us into that particular setup as well. So nice entry on that one. TXRH, Texas Roadhouse, just triggering us in last week. The high there, 49.91. Our on-stop order there at 44.88. So just triggering us in on that one before coming back a little bit. And the other one to trigger was BRKR, Bruker Corporation. And again, triggering us in. Obviously, during the course of the week, price came back a fair way, but managed to close up, towards its highs. So not such a bad candle there, despite the colour of its body. So those were the ones that triggered during the course of the week. Trailing stops on the following: AWK, which we've already seen, the pre-existing order there, or pre-existing position. Last week's candle there, dragging the ATR upwards and onwards, so performing really nicely. Extra space storage, I need some of that in my house. And last week's candle, just a little bit higher than the previous one, and you see just dragging that 3ATR line up just slightly higher as well. KMB, Kimberly-Clark, and that's performed pretty nicely since triggering in a couple of months ago, moving up now. Trailing stop is past our break-even level, so that's a good sign. And we've got lots of space for it to wriggle around and do whatever it needs to do. MCD, McDonald's. Last week's candle, higher close, everything. And again, just dragging that 3ATR line up just that little bit higher as well. So that was McDonald's. And the other one, COR, Coresight Realty. Again, similar sort of candle, high, and again, just dragging that 3ATR line up that little bit further past break even as well. So, all good signs. I did have an email from one of the members just this last week, and I thought just make some comment on a particular stock that they'd been involved in many years ago. This is a stock, Constellation Brands. I'm not 100% sure what Constellation Brands do. I think I was having a chat with Jeff before, and he thought that they may well be involved in the alcohol or beverages as a big supplier of those. And anyway, this is obviously a stock that's just trended really, really nicely and really obeyed, or respected is probably the right word, this trailing 3 ATR line. And they made comment that they had got into it back in, I think it was around about 2014, and at the time, using the existing rules that were in place back then, had been stopped out fairly early by having a fairly tight sort of stop, or one at least based on price action as opposed to ATR, only to go back and reflect on previous trades to see that it had continued to move onwards and upwards, and really quite clearly respecting that wider trailing stop. And so what was a stop out for 1 hour at the time ended up being a trade that you would have still been in, and at this particular point was up around about 10R. So again, it's not so, your entries, whilst they are important in the scheme of things, they're not nearly as important as the what you do when you're in your positions. And I think hopefully over the last 8 to 10 months, people have got to see the value in maintaining a slightly wider stop, and just being patient and allowing trends to unfold, because you're never going to know which one of those stocks in your portfolio is going to behave like this. So I made mention that they're a little bit like your own kids. You with a bit of patience, a little bit of effort along the way, hopefully they turn into something that surprises you a little bit further down the track. And I think it's the same with stocks here, that if you're patient and if you do the right thing, then along the way you're going to have some stocks in your portfolio that do this and make up for the ones that perhaps don't turn out quite as well, and that's going to make a big difference over the longer term. All right, any questions, folks? Observations? How we're feeling about the markets at this particular point in time? The Aussie market has been is really battling at the moment to hold up at its current levels, and I think it's going to be interesting to see how this earnings season goes over the course of the next 4 or 5 weeks. Typically, the first week doesn't have a lot of companies reporting. It's sort of those middle few weeks, and we'll get to know a little bit more about that. It's interesting that Jeff made comment on Friday as well that earnings have been coming down, and the analysts who are putting forward their forecasts, etc., have been reducing their expectations along the way. So with reduced expectations, if the companies happen to beat those reduced expectations, then you're likely to see rallies in stocks. If they happen to miss those reduced expectations, then you're likely to see those particular stocks concerned sell off quite heavily. All right, folks. Well, again, if you've got any questions or anything like that, certainly jump on the phones, shoot us an email, and we'll get in touch and point you in the right direction. All right, we'll catch up with you a little bit later on in the week. Bye for now.